Now today in accounts, that is lesson number 3, company's final account, we are going to do the practical sums. Fine. Now in practical sum, question number 4. That is, following balances are taken from the books of SEMA Limited on 31st/3/2017. Prepare statement indicating assets of balance sheet as at 31st/3/2017 as per Schedule 3 of Companies Act 2013. See, in this particular sum, they have told you only to prepare the asset side of balance sheet. Okay, so see, this is the format of our asset side, that is balance sheet of SEMA Limited as on 31st/3/2017. Assets, see, only second part they have told you, they have not told you to prepare the first part, that is equity and liability. Clear? Non-current assets, in that fixed assets, tangible asset, intangible asset, then non-current investment, long-term loan and advances, other non-current assets. See, this should not be up and down while writing the answer in board exam. Fine, the note number will be as it is, 10, 11, 12, 13 and 14. Then second point, that is current assets, so current investment, inventories, trade receivable, cash and cash equivalent, short-term loan and advances and other current assets. See how you will remember this. So CIT and then CSO. So here CSO, so CIT, CSO, and here there will be, that is FNLO. Okay, so FNLO. So like this you'll remember. Now here 15, 16, 17, 18, 19 and 20. The amount column will be divided into two parts, that is the first amount column and the second amount column. Okay, so like this you'll prepare the format. Now one by one we'll post the item. See, current investment, it is how much? 12,000. See, current investment is coming here, current investment. So first you write down the amount, that is 12,000 in the first column. Clear? Then short-term loan and advances. See, again short-term will be here. See here, this part is non-current. Okay, non-current means which is for the long-term period, and this portion is for current assets. Current assets, it is saying, see, current word itself says that this is for short-term, and non-current says that this is for fixed, and fixed is always for a long-term. Okay, so now what is the second item? So short-term loan and advances, it is 16,000. So here see, short-term loan and advances, so here you will write down 16,000 in the first column. Clear? Then other current assets, so other current assets is 7,200. So see here, other current assets, that is 7,200. So here we will write down, that is 7,200. Clear? Then next is fixed asset, that is tangible. So fixed asset tangible, it is 5,60,000. So here fixed asset in that tangible, here we will write down, that is 5,60,000. Clear? In the first column. Then cash and cash equivalent, it is 14,000. Okay, so cash and cash equivalent is here, that is 14,000. Clear? See, it is better to use scale when you are seeing the amount, so that the amounts are not going up and down. Okay, inventory means stock, again it is for short term, so you will find this in current. So inventory here, it is 46,000. See here, inventories are there, that is 46,000. Fine. Then the next item is trade receivable. Trade receivable is 15,800. So see, again here trade receivable, that is 15,800. Clear? Then next item is, that is other non-current asset. See, it is non-current. So you will go to the first one. So other non-current asset, they have given 18,000. See here, other non-current asset, that is 18,000. We will write down the amount in the first column. Then non-current investment. See, again non-current investment. So you will go in first part, that is of non-current. So non-current investment is 26,000. So your non-current investment 26,000. See, it is very easy. Only you have to remember the format. Learn the format once. Next, you have to just input the amounts. Fine. Next is fixed asset intangible. It is 1,20,000. So fixed asset intangible, it is 1,20,000. Fine. So here, then long-term loan and advances, it is 22,000. So see, you will find here long-term loans and advances, it is 22,000. So we'll write down 22,000 here. Okay, so here all the items are getting over. Now what you will do, see, this is your first portion. In first portion there are 4 items, F, N, L, O. So do one thing, that is do the total year, and here you will put the addition of this items. The addition will come here in the second column. That's why we are preparing two columns for the amount. Clear? So we will add it up. So see here 5,60,000. So 5,60,000 plus 1,20,000 plus 26,000 plus 22,000 plus 18,000. Okay, so what we are getting? We are getting 7,46,000. So here in the outer column you will put 7,46,000. Now you will go to your second part. Okay, asset is divided into two parts. Please remember, one is non-current and one is current. Now you will do the total of your current items. Okay, and the total you will put here outside. Okay, so see, current assets, first amount is 12,000 plus 46,000 plus 15,800 plus 14,000 plus 16,000 plus 7,200. Okay, so what you are getting? You are getting the total, that is 1,11,000. Write down the total, 1,11,000 here. Okay, now see, now what you will do? You will do the total of this 7,46,000 and this 1,11,000. Okay, so see, that is 7,46,000 plus 1,11,000. Okay, what you are getting? You are getting 8,57,000. Okay, so this is your total of asset side of balance sheet. See, one more thing, I'll show you the shortcut, that is, see, first we have added this, we got this. Okay, again I'm showing you. On button we have pressed 5,60,000 plus 1,20,000 plus 26,000 plus 22,000 plus 18,000. Okay, is equals to, we got this 7,46,000. Now continue with this only, do not press on button. Okay, so in this calculation only will continue. 12,000 plus 46,000 plus 15,800 plus 14,000 plus then 16,000 plus 7,200. Okay, we got this 1,11,000. Okay, we have written here. Now instead of doing total of this two, directly press GT button. Okay, this is the GT button on your calculator. Press this GT button, you will get directly the total, that is 8,57,000, which is here, that is 8,57,000. Okay, so this is the shortcut of, that is GT. GT stands for grand total. Okay, so whatever calculations you are doing on calculator, you can use this GT button. Even this is useful in statistic when you are doing the sums of less peers and partials. Okay, that is when you are doing P1 Q0 P0 Q0. So after doing the multiplication, you can at the end add GT for one calculation. Okay, so you'll press on button when you are doing for P1 P0, then again when you are doing for P0 Q0, again press the on button and start a new calculation. Okay, so this technique you can use in that also, that is in statistics. Fine. So here the question number 4 gets over. Okay, now we will start question number 5. See, now question number 5. Following balances are taken from the books of Yuva Limited on 31st/3/2017. Prepare statement indicating equity and liabilities. See, now here they have told you to prepare the balance sheet, but they have told you only to prepare the equity and liability side. Fine. It means asset side you are not supposed to prepare in this. Of balance sheet as at 31st/3/2017 as per Schedule 3 of Companies Act 2013. Clear? So see, now in this you are supposed to prepare only this part, that is first part, that is equity and liability. Okay, so this will be the format for your question number 5. Balance sheet of Yuva Limited as on 31st/3/17. Particulars, we have to write down the note number, amount, 2 columns you will prepare, the first column for amount and the second column for amount. Now see, as you have done this sum, question number 4, it was asset side. In asset side there are only 2 parts. Okay, first part is non-current asset, second part is current asset. Whereas here in equity and liability there will be 3 parts. First part is shareholders fund, second part is non-current liability, and the third part is, that is current liabilities. Fine. See, now in first part, shareholder fund, there will be 2 things, that is share capital and reserves and surplus. In second non-current liability, there will be three things: long-term borrowings, other long-term liabilities, and long-term provisions. Then in short, that is in current liabilities, there will be, so current states it is for short-term period, so short-term borrowings, trade payables, other current liabilities, and short-term provisions. Okay, the note number you'll put 1, 2, 3, 4, 5, 6, 7, 8 and 9. So please remember that in equity and liability there are 9 items overall. Fine. Now see the items. First, 1,30,000 equity shares of 5 each, that is of 6,50,000. Okay, so see, this is related to shares, so this is your share capital. Okay, so in share capital, that is shareholders fund, you will write down this. Okay, so we will write down here 1,30,000 equity shares of rupees 5 each. See, if the multiplication, that is 6,50,000 is not given, so what you will do, you will multiply 1,30,000 into 5. Okay, like this. So here the amount you are getting, that is 6,50,000. So here in the first column you will write down 6,50,000. Fine, like this. Now see the second item, it is general reserve. Okay, general reserve they have given 70,000. So see, here only in shareholder fund reserves and surplus is there. Okay, so we will write down here general reserve. Okay, so general reserve, the amount of general reserve they have given, it is 70,000. So here you will write down that is 70,000. Clear? Then next is provident fund. See, provident fund is one type of provision, okay, which is for a long term. Okay, provident fund is a provision because we are keeping the fund aside in the business. Okay, so provident fund is a fund which is to be given. See, provident fund the employees will be getting after they leave the job. Okay, so after the retirement period, or after whenever they are leaving the job, then they are getting. So it is obviously for a long term period. Okay, so that's why it is a long term provision. So amount of provident fund is 3,60,000. Okay, so here see, long term provision, that is coming under the heading of non current liability. Okay, so here we will write down that is provident. So here that is provident fund. Okay, the amount of provident fund is 3,60,000. So here we will write down that is 3,60,000. Now next, see what is the amount. Creditors item is there. Okay, creditors, the amount is 86,000. See, creditors is known as trade payables. You are paying the amount, okay, for trading, that is either that is purchasing. Okay, so creditors amount is 86,000. See, trade payables you are getting in current liabilities. Okay, trade payables. So here you will write down creditors, the amount is 86,000 in the first column. Clear? Then next is public deposit. See, public deposit is a borrowing for a long term period like bonds. Okay, public deposits are just similar to bonds. As it is for a long term period, it will come under non-current liability, that is long term borrowings. Okay, and the amount for public deposit, it is 3,26,000. So here we will write down public deposit. Okay, that is 3,26,000. Okay, then next, that is outstanding rent. See, these are your other liabilities, that is other current, because it is for a short term period. Okay, so outstanding rent, the amount is given, that is 13,000. You will find out here in current liabilities, that is other current liabilities. Here you will write down all your outstanding expenses. So here outstanding rent, the amount is 13,000. Fine. Then next, see, provision for tax. See, for tax provision, it is for a short term period. Okay, so here the last item, see, short term means you will go to direct current liabilities. See, short term provisions. Okay, so you will write down here, and the amount for provision for tax is 68,000. So here you will write down that is provision for tax, amount is 68. Next is C, that is other long term liabilities, that is 15,000. Okay, so other long term liabilities, so see here it is there in non current, that is other long term liabilities. Okay, the amount is, that is 15,000. So in the first column we will write down that is 15,000. Fine. Then there is temporary loan, that is credit balance 12,000. See, temporary loan, okay, as the word temporary is there, so it means it is short term, and loan you have borrowed, so it is short term borrowings. Okay, so temporary loan, that is 12,000. It will come here in short term borrowings. We will write down here, that is temporary loan. Okay, that is 12,000. Fine. Now what you will do, so all the items are over. Now what we will do, so see here there are three parts: first part, second part and third part. So first we will do the total of only our first part. Is this clear? So see, and again I'll show you how to use your GT button. Okay, so first you will do the total of this two. On button I have pressed, so 6,50,000 plus 70,000. So 6,50,000 plus 70,000, okay, is equals to, don't forget, so here it is 7,20,000. Fine. Then we will do the total of your second item. Okay, it means this. So till here you have to do the total. So 3,26,000 plus 15,000 plus 3,60,000. Okay, so the total is coming to 7,01,000. So I will write down here 7,01,000. Now the third part. Okay, so here now we'll do the total, that is 12,000 plus 86,000 plus 13,000 plus 68,000. The total is coming to 1,79,000. So here I will write down 1,79,000. Okay, and now we will do the grand total. Okay, so that is total. Now see, again you will not do, that is press on calculator 7,01,000, 7,20,000 and 1,79,000. Directly what you will do, you will directly press the GT button. Okay, so the total is coming to 16 lakh. So here you will write down, that is 16 lakh. See, in board exam you have to save your time. Okay, so here instead of again writing this, okay, that is typing on calculator 7,20,000 plus 7,01,000 plus 1,79,000, directly you can press the GT button, you will get the total direct. Okay, but only you have to take the precaution that when you are starting from here 6,50,000, the on button should be pressed, and in between till the end you are not getting this 16 lakh, you are not supposed to press again in between the on button. Okay, so that precaution you have to take care. Is this clear? So this is the solution for question number 5. Now let us see question number 6. Okay, following balances are taken from the book of Moon Limited. Prepare balance sheet of 31st/3/2017 as per the schedule 3 of Companies Act 2013. Now see, in this sum what they have told you, you have to prepare the balance sheet. Okay, see, as in question number 4 we have prepared only asset side. In question number 5 we prepared only equity and liability side. Now in this sum you have to prepare both. Okay, so see, this will be your format. Okay, balance sheet of Moon Limited as on 31st/3/2017. See, it always starts with your first part, that is equity and liability. In that 3 parts: shareholder fund, non-current liability and current liability. So like this you have to prepare the format in board exam also. Okay, with note number and 2 amount column. Now on next page what I have done, see, if you want, so for example here this mine is getting in at the end of this page. Okay, but if yours is coming till here, so you will start assets from here only. Okay, don't go for that on a new page. Is this clear? Again I'm repeating, suppose your liability side is till here, so from here only you will start your asset side. Okay, by putting number 2. Is this clear? So here now your asset side, there are 2 parts: first part non-current and second part current. Okay, so now we will start transferring the amounts. See, first interest accrued. See, accrued means it is your outstanding income. Is this clear? Interest accrued is your outstanding income. Okay, as this is your outstanding income, first of all it will go to current asset, and in current asset it will go to other current assets. Clear? So it is, the amount is 30,000. So here we will put, that is interest. Okay, that is accrued. Okay, and please remember, accrued word means it is your outstanding income, and outstanding income is always on asset side. Okay, in the first column you will write down, that is 30,000. So here in the first column we will write down that is 30,000. Is this clear? Then what is there? Plant and machinery. The amount is 15 lakh. See, plant and machinery is your fixed asset and it is a tangible asset. Okay, so in tangible asset we will write down plant and machinery. The amount is 15 lakh in the first column. Okay, then next is equity share capital. See, share capital is always coming here in shareholder fund. Okay, so here we will write down equity share capital. Fine. The amount is again 15 lakhs. So in the first column we will write down that is 15 lakh. Okay. Then bank balance and cash. See, bank balance and cash goes to asset side. In current assets, that is cash and cash equivalent, 67,500. Okay, so see here, this is your cash and cash equivalent. Here we will write down that is bank balance and cash. Amount is 67,500. Okay, next is that is general reserve. General reserve goes here in shareholder fund, reserves and surplus. Okay, the amount of general reserve is 30,000. So here we will write down that is general reserve 30,000. Then see, closing stock. Closing stock means inventories. Inventories is how much? 2,70,000. Okay, so inventories is coming in current asset. Okay, closing stock will be coming here. So here I will write down closing stock. Fine. And then the amount is 2,70,000. So here 2,70,000 in the first column itself. See, only the totals of this will go to the next column. Then creditors. Creditors is, see, the amount is for creditors, that is 6 lakh. Okay, so creditors goes to, that is trade payables. It is a liability. So see, in liability trade payables is there. Here we will write down creditors, that is 6 lakh. So here creditors, the amount is 6 lakh. Clear? Then next is debtors. See, creditors goes to trade payables, so debtors comes to trade receivables. Okay, in current assets. So debtors is 3,45,000. Clear? So here debtors in trade payables I will write down. Debtors are how much? That is 3,45,000. Okay. Then provision for tax. Provision for tax is 90,000, and provision for tax, I told you, it is a short term provision on liability side. So here provision for tax we will write down in liability side. Okay, that is equity and liability. So provision for tax, the amount is 90,000. So here in first column we will write down 90,000. Then 12% bank loan. See, you have taken loan. It is not specified. Okay, the time period is not specified. So it means it is for a long term. Okay, as this is for long term, it will be coming under non-current liability, long term borrowings on equity and liability side. Okay, so 12% bank loan, the amount is 1,95,000. So here we will write down that is 12% bank loan, amount is, that is 1,95,000. Fine. Then non-current investment. See, it is already, they have told it is non-current investment. Okay, so directly title is there, 45,000 is the amount. See, this is your non-current investment in non-current assets. So directly here in front of this we will write down that is 45,000. Clear? Then electricity deposit. See, electricity deposit is an asset. Okay, when you have taken the electricity consumption, okay, so that time you have paid the deposit. Okay, and when you will withdraw the service of electricity, they will pay you back. Okay, but this is electricity deposit, it is an asset. In assets where it will be recorded, so in non-current asset, as it is for a long term, so it will be coming under long term loan and advances. See, this is one type of advance which you have paid to electricity department for using the electricity service. When you withdraw this service, at that time this deposit they will pay you back. Okay, so electricity deposit will come under the heading of non-current asset, term loan and advances in this title. Okay, so here I will write down that is, here electricity, okay, deposit. The amount of this is 1,87,500. Clear? Next item is provident fund. See, it is a fund, it is a provision, but this is for long term. So provident fund will come here on equity and liability side, that is long term provisions under the heading of non-current liability. Okay, so it is of 30,000. Clear? So here we will write down provident fund, that is 30,000. Fine. Now see, when you will do the total, you know that equity and liability side you have three items. Okay, so first we will do the total of this two. Okay, so see here again GT button we will be using. Okay, so first press on button. Now here it is 15 lakh plus 30,000. So you can do orally also 15 lakh 30,000, but do on calculator. That is 15 lakh plus 30,000. You are getting 15 lakh 30,000. Now do the total of your second item. Okay, your second item is till year. Okay, it means only two items are coming till year. Sorry. So here 1,95,000 and then 30. Please draw a single line only here. Okay, here there is no double line. By mistake it went up, so I did like this. Okay, so only a single line like this. So 1,95,000 plus 30,000. So you will not press on button. Directly on this only 1,95,000 plus 30,000 equals to sign. So that is you are getting 2,25,000. So here write down 2,25,000. Fine. Now the third, that is this two items. So here put the line 6,90,000. You can do it, okay, orally, but 6 lakh plus 90,000, that is 6,90,000. Now putting the total. So here in total you will put double line, okay, and press the GT button. So you are getting that is 24,45,000. So here we will write down that is 24,45,000. Clear? Now coming on to next, that is your asset side. Now press the on button because you will start the new calculation. Here there are two parts. So the first total is still year. Okay, so see, 15 lakh plus 45,000 plus 1,87,500. You are getting that is 17,32,500. Clear? And the another, that is second number, the total, the items are till year. Okay, so now we'll do the total of this. Again, don't press on button here right now. So 2,70,000 plus 3,45,000 plus 67,500 plus 30,000. Okay, you are getting 7,12,500. Now press the GT button. Okay, so 24,45,000. So 24,45,000. Now you can see that the total of your equity and liability side and the total of your asset side is tallied. Okay, it means you are getting the same total. Clear? So this is the solution for your question number 6. Now see the question number 8. Following balances is taken from the books of Patel Limited. Prepare statement of P&L for the year ending 31st/3/2017 as per Schedule 3 of Companies Act 2013. See, here they have told you to prepare statement of profit and loss of Patel Limited. See, this is the format of P&L. First, revenue from operation, that is sales. Other income, we have already discussed this first. The total of this two will be here. Then fourth is expenses, PCD. See, PCD, then EFD, and then O. So see, PCD, EFD, O. That is purchase, change in stock means opening stock minus closing stock. Direct expenses, all the expenses which you were recording in trading account, that. Employees benefit expense, that is which is being received by employees. Finance cost, all type of interest are coming here. depreciation and amortization. Amortization means write off. And then other expenses, and now you will do the total of these expenses. It will come here in the first column. Now what you will do, this total expenses after taking into here, you will put here in the outer column, and then from this total revenue, this total expenses will be deducted. Okay, see, from this amount you will deduct this amount, so you will get that is profit before tax here. Okay, directly in the outer column, whatever tax is there, that you will deduct, and then afterwards you will get the amount that is profit after tax. Fine, we will start the sum. See, first of all, sale of scrap. See, this is not a regular sale, this is sale of scrap. This is your income. Okay, so it will be recorded here. See, do not write down in this sales. This is your sales of goods, and this is not the sale of your goods, it is the sale of your scrap. Okay, scrap means bhangar, whatever scrap or pasti you can say that you are selling. Okay, so that is sale of scrap. It is your other incomes. So here I will write down sale of scrap. The amount is 10,500. So here I will write down 10,500. Clear? Then cost of material consumed. See, cost of material consumed, that is your purchase. Okay, so it will go directly to purchase. So see, your purchase, that is cost of material consumed. Fine, that is 1,87,500. Clear? Salary, this is given to employees, so it will come in employees benefit expense. So salary is 78,000. Fine, so in employees benefit expense we will write down salary here. Okay, amount is 78,000. Then interest paid. See, interest paid, it is your finance. See, interest paid will be finance cost. Interest received will go to, that is other income. Okay, interest received here, interest paid, so here in finance cost the amount is 9,000. So here we will write down that is interest paid, that is 9,000. Okay, again I am repeating, interest received, then it will come here in other incomes. Now it is sales. The amount of sales is 3,81,000. So here sales 3,81,000. Fine. Then change in stock of finished goods. See, directly opening minus closing they have given. Okay, so amount is, that is 12 lakh. So here we will write down change in stock of finished goods. The amount is, that is 12,000. Fine. Then office and administrative expenses. Okay, so these expenses are recorded in P&L account. It will go here, that is other expenses. Fine, the expenses which you are recording in P&L account will be recorded here in other expenses. Okay, so here we will write down that is office and administrative expenses. The amount of this is 15,600. So here in first column 15,600. Next, depreciation. Depreciation means written off. Depreciation and amortization, in this title you will write down. Okay, so here the amount is, that is 84,000. Okay, so here we will write down that is 84,000. Okay, depreciation, that is 84,000 directly. Okay, here in the column of depreciation and amortization. Now they have given provision for tax on profit is 30%. Okay, so here see, it will not be, amount is not here, only they have given percentage. So here also you go provision for tax, you will write down only that is 30% right now. Fine. Now what you will do, so see, all the items are over now here in this sum. So now you will do the total of your first two items. Okay, so the total of this first two item, that is how much? So here see, 3,81,000 plus 10,500. It is coming to, that is, here we will write down the total of this two. So 3,91,500. Fine. Again, the total of this two you will write down here. Now what you will do, you will do the total of all these expenses and you will write down here in total expenses. Clear? So now we will do the total. See, first is 1,87,500 plus 12,000 plus 78,000 plus 9,000 plus 84,000 plus 15,600. Clear? The total is coming, that is 3,86,100. So I will write down here in total expense in front of the total expenses 3,86,100. Now what you will do, from this 3,91,500 you will deduct this 3,86,100. Clear? So now see. So first there is 3,91,500 minus, see you will deduct, minus this expenses, that is 3,86,100. Okay, you are getting that is 5,400. Okay, so here see, profit before tax, third minus fourth. Okay, that is total revenue minus total expenses. You are getting 54,000. See here in the outer column only you will write down. Okay, 54,000. Now tax is how much? 30%. So what you will do, 54,000 is there on your screen. Press multiple and 30%. So it is coming to 1620. Clear? So write down the amount when you calculate. See, again I am repeating, 54 was on your calculator, multiplied by 30%, you get this. Now in calculator press minus and then is equals to. So directly you will get this, that is profit after tax, that is 5400 minus 1620. So you are getting 3780. Fine, that is treated as profit after tax. Fine, this is the solution of your question number 8. Hope this is clear. But one thing you remember, see, these are the two items. Okay, if in this sum balance sheet is also there, this again it will go to balance sheet. See, provision for tax where you are recording in short term provision, and profit after tax where you will record in reserves and surplus. See, this will go to reserves and surplus in balance sheet, and this will go to short term provisions. Okay, but right now we have not prepared, so right now we are not supposed to transfer anywhere. But if P&L and balance sheet is both to be prepared together, then this last two items will again go to balance sheet. Please keep that thing in mind. Okay, this will go to short term provision and this will go to reserves and surplus. Okay, hope the things are clear. In the next video we will discuss question number 9 and 10 of your textbook, where you have to prepare both the things together, that is statement of P&L and balance sheet, including equity and liability and asset side. So this will be your complete sums. Okay, so next video you will get soon. Hope till here the things are clear in your mind.